Good afternoon, everybody. Welcome back to the Opportunistic Trader. We're lucky to be joined by Mark Fisher. He's been joining us regularly to talk about the energy markets, equity markets, technical analysis, a lot of great news and observations. How's it going today, Mark?
Yeah, what's going on?
So tell me, it's been a volatile week. Equities all over the place, triple bottom, triple top. Crude oil all over the place with OPEC. What are you looking at?
Uh, I still think I think it comes down to two things. I think the motto has to be keep it simple, stupid, and the two glaring things that stare out at me is to be short paper assets, which means to be a short a combination of S&P or Nasdaq, and also short the bond market, so that you don't get if you look at the chart of that going back the last 5 years, it's been a one way, obviously straight up, and now obviously I think that the market is correcting itself, and I think that being short bonds and S&Ps in a ratio is an easy trade to make. I think the other trade to make is, again, it's the same thing we've been talking about, Mike, for the last 3 months. Natural gas, the best performing asset now domestically, you know, and
Absolutely.
even with the weather getting a little warmer, natural in the face of a big roll, markets back, it's within striking distance of the highs. So crude oil, you got too many, unless you're going to have a long term view, you got too many back and forth with OPEC news and this one and that one, or trade news, or who knows what. So you can get whipsawed. But natural gas is trading non-news. It's just moving. So again, is 448 too high? Who knows? Looks like the market's in. How high is high? I have no idea. But it looks like eventually this thing's going to trade much, much higher.
From a technical perspective, what do you make of the price action? We had an explosive move and we've held it really well, and it's actually gotten less volatile over the past 10 days or so.
Right. I think the volatility is not going to increase a lot till, you know, until the weather changes dramatically. Again, obviously, if the weather broke, completely, you'd have, the marketplace would probably, you know, collapse, to some degree, maybe 70 cents. But again, people looking at the March April spread, but I think that, you know, I don't know. No one ever goes broke buying highs, and no one ever goes broke selling lows. You know.
It's been a difficult market. When you take a look at S&P, we've been in a choppy range, 2,600 to 2,815. We're now, trading 2,654. Following yesterday's rebound, it looks like ugly price action here. What are your thoughts on the China sort of back and forth, especially with this Huawei arrest?
I have no idea. It's just too. That's outside my wheelhouse. I try to, again. The easiest thing to do, in my opinion, is to, on rallies, to be sell S&P and bonds together as a package, and to buy nat gas. And again, the nat gas, you typically you don't even really want to buy dips. You really want to buy strength. You know.
Yeah. What about we have a question coming in asking how has trading changed for you, 10 years ago versus today? There are also I spoke with this person who was asking the question specifically about like last night, or I'm sorry, Wednesday night market on open. There's that huge gap down in the S&P on very little volume. It just seems like a lot of algos. And how does that change the way you look at things technically?
Uh, I change my way of looking at things every 2 days. I mean, the point being is the market is a moving target, and it's a moving education. So what worked 10 years ago doesn't work now. But I think the lessons to be learned is that you really want to stay away from news-oriented markets unless you are making the news. So OPEC can come out and someone can say something, the market can be up $2 or down $2. Steve Bannon can open his mouth, or Trump can say something, or the Chinese leader can say something, the market can be down or up. To me, that's why having on the S&P bond spread as both, long term makes sense and keeps you somewhat out of trouble in the short term. Again, natural gas maybe has more legs. I think it does. I think also, to be honest, I think corn has some legs to it. I don't really know why, but everything we look at technically says corn has a decent shot to trade near term in March above $4.
So is that a trade that you might look at, and where would you maybe look to say that you're wrong? We're trading, it looks like in March, corn's trading at like
If
384.
March coin isn't $4 by next Friday, time wise, I'd be out. And if March coin broke 375, I'd be out.
I think
So
we have
there's
some data coming up on Wednesday, as a matter of fact. last kind of data point I think of the year, really on the agricultural side. But then obviously it's paying attention to this China back and forth as well.
Yeah. So that's it. I think that, I think that no one's really panicked in the stock market. I think no one's really going to panic until we take out, get below 25, another 70 handles. And that's it.
What about cryptos? Anything there?
I told you we're still working on that big thing. And so not really, it's not a crypto thing, but I
No, I
have
was
no,
just more referencing Bitcoin. Right now, I see the futures trading 3160. It looks like when the exchange issued it, it was over 16,000. It traded up for a week or two, and then that was it. And here
no,
we are.
the exchange was the high tech. I think the day the exchange CME came out was the high tech.
I think you're right, actually. Yeah, it drove it up right in early trading. And have you heard many people that are still caught up in that? Do you get the sense that it's long term? People just now at this point, they just have it and they're keeping it?
Good. No opinion, no knowledge. I don't know.
Huh. All right. What about into year end? You mentioned selling, the paper assets. Is that typically we get some sort of Santa rally? You think there's any sort of after the Fed next week? Actually, I guess the Fed's actually going to be the week after next. But do you think that we could get some up movement, or you just think just lower across the board and just sell all rallies?
I think the stock market may go up, but I think the package itself, S&P bonds will, that package will make money. So maybe the S&P goes up, but the bonds go down more, or the S&P bonds go down a little, or bonds go up a little, and the S&P goes down more. But I think the package will be good.
Gotcha. All right.
All right, that's it. Have a great weekend, Mike.
Thanks a lot, Mark. Talk to you later.
How's my friend Larry doing?
Friend Larry's doing good. He's had an active week. Didn't trade so well the past 2 days. He's off to a slow start this month, but he's looking for some opportunities. So yeah, he's doing well.
Okay, and
Not around this second.
And how's Jersey Mike's?
Jersey Mike's is pretty good. One you mentioned last time, Pizza Hut or a pizza play.
Right. Well,
There was.
Look what's happening. Take a look at all the pizza stocks.
We had a few people actually saying that they disagree. They think pizza is expensive.
Look what's happened to the pizza stocks in the last couple of weeks. I'll leave it at that.
All right, we'll take a look. All right, thanks, Mark Fisher. Talk to you later.
Right.